Dividend investors, bonjour. This is Mike Yehu, founder of Dividend Stocks Rocks and passionate investor. Welcome to your last Dividend Uncut report of the week. Probably the most important video that I've recorded this week. I've started to think about what's happening on the market, and then we had a bunch of dividend suspensions and dividend cuts. And even some members were asking, well, I know that you're the dividend guy. I know that your paid service is called Dividend Stocks Rocks, but do you really think right now, considering that the economy is on lockdown, that dividend investing is still relevant, right? We heard very bad news this week about banks in Europe, like especially in France and the UK, pressured to stop paying dividends, stopping buying back their shares. We expect more companies to suspend their dividend as well. So is there a place for dividend growth investors in this world? And the answer is yes. The answer is yes, because first, it's a temporary measure. Keep in mind, the virus is not going to be there in 2 years. It's not going to be there in 5 years. It's not going to be there in 15 years, right? The coronavirus is a terrible thing that's happening right now for the humanity, and it endangered like a lot of people, and it's a tragedy, but it's still temporary. This means that lots of companies will bounce back, will go through this recession, and will thrive. And you know, I just received my DSR Pro report that you can see right there on my screen. My team is basically reviewing all my holdings one by one, rating them, looking at what happened in the past quarter. So between that was the year-end quarter. So all the reports that were published and announced by companies between January and March. And I got here on my list, see all that yellow, those are the companies that I don't think they will even cut their dividend, probably not even stop their dividend growth. We have companies like Alimentation Couche-Tard. This one, I mean, they're running convenience stores. They're all open. They're targeted as essential businesses. Most importantly, in March, they announced a double-digit dividend growth while we are in the middle of the crisis. Do you really think they're going to cut their dividend in 3 months? I don't think so. I do have banks, National Bank, Royal Bank. You know, there's a very interesting paper this morning in the Globe and Mail. So if you subscribe to that, you'll be able to read it. Basically what it says is Royal, TD, Bank of Nova Scotia, and BMO, they were all in that paper. All the CEOs were saying, you know what? We don't intend to change our dividend policy this year so far. We are incredibly well capitalized. We take less risk than European bank as well. Sometimes they want to say that they're smarter and clever, but in fact, it's just because our regulation in Canada is a lot tighter than in other countries. But even then, we have the best banking system in the world. And then again, we prove it because our CEOs right now are just telling us, you know what, we're going to keep the money rolling. We understand that it's a big part of many investors for their pension plans as well. And we don't want to let them down. It would send a very bad message, and several companies will think the same way. If you cut your dividend, it will send a terrible message, and I don't think we want that. So any companies that is still in activity right now will keep rolling. I do have other companies like Fortis. Do you really think that Fortis is going to cut down its dividend? They show over 45 years or 46 years of dividend growth each year. Do you really think they're going to stop that now? They're not at their first recession. They're going to keep their dividend rolling. I do have tech stocks, Apple, OpenText, Microsoft. Microsoft is sitting on like $100 billion in cash. No way they're going to cut their dividend. Visa? Well, I'll let you guess, right? Texas Instrument, Gentex has no debt. You know, all those companies will continue to pay their dividend. They will likely continue to increase their dividend. And I don't want to go through all my holdings right now because it's completely irrelevant. I would say probably like 85% of my companies right now, I would guess that they are like safe to very safe dividend payers. So yes, there will be after this virus, and overall most of your companies will continue to pay dividend. Maybe there will be a suspension for some times. I can understand that some companies, I would not be surprised, for example, that Disney would eventually suspend their dividend. I mean, half of their revenue is missing right now because their park teams are closed, but they will reopen. don't think that Disney is going near bankruptcy right now. They are the king of content. They have plenty of other platforms. They have multiple streams of income. They will go through this and they will thrive once the economy go back in. So for all those reasons, I think that dividend investing is more relevant than ever, mostly because companies that are still paying dividend right now, they're telling you a very strong signal. They're telling you that their business is strong, that they have a safe balance sheet, and they keep making money. As an investor, I want to hold those companies that keep making money, right? And if you have wondered if this was a skull, well, it's not. See, those are palm trees, and then you have surfboards right there. It's actually a t-shirt that I picked up in Hawaii. So I wanted to remind myself on the beach today, feel good about it. It's Friday. Have a beer. Not right now, it's in the morning. So have a beer around 5, relax, and enjoy your weekend. We're going to get through this. Stay home, stay safe, and most importantly, stay invested. Cheers.